But let's talk about a couple of actual real world examples. And so Keith, maybe run through an example of a company you've looked at, you've found something interesting. How did you approach the research process?
Well, I'll give an example of a company I think that's really interesting. It's a company called Ashtead. They're an equipment rental company. They're headquartered in the UK. Their business is primarily Sunbelt rentals in the US. The idea just came from me just thinking about, okay, what really drives the business model? A simple way to think about Ashtead is they have something in the business called dollar utilization, which basically represents saying, okay, if you buy $1 worth of equipment, how much revenue does the company generate over the period of time at which the equipment will be rented, plus the salvage value divided by the original equipment price. So if you look at Ashtead's numbers, their dollar utilization is about 57 cents for every dollar they invest in equipment. So what they'll do is they'll invest in equipment $1 first year. They'll get 5 years of 57 cents. In other words, then they'll get a salvage value of roughly 75 or 80%. What they do with their equipment is they buy new equipment and sell it when the need sort of goes down. So if you do that, you're getting about a 3 times return over 5 years. And if they can repeat that process, you can get a very favorable return on that business. So it should be able to, you add G&A on top, but it should be able to grow at like at least 15 to 20% per year. And the business sells at roughly around 15 times. But how my process, I think, has changed a little bit from historically is before I was looking at primarily, okay, interesting businesses and multiples. Now I'm trying to dig into what's the drivers of growth, and are those drivers of growth sustainable? For example, the reason Ashtead, I think, is an interesting business, you just see the economics there, but they have a very long runway. So part of what they do is they cluster their groups. Only about 50% of their groups are clustered, and the market share they have in the United States is probably like 12%. So there's still a very long runway. And so I think probably for the next at least 5 to 10 years, you continue to get these kinds of returns. And what's interesting also is you can see the returns are getting better over time. So one thing you can take a look at is say, okay, what was this business making 10 years ago versus now? And you get a little of the momentum and understanding what's really driving that is their basically ability to do this, what's called specialty leasing versus core leasing. So in essence, there's a lot of my process has changed to sort of digging into what are the drivers and coming up with KPIs and sort of tracking those over time. So I think that's, in general, sort of an example.
But you're only looking at public filings, or you're speaking to management, former execs? Like, what's the...
It's a combination. A lot of it is you're trying to understand the business model. And there's a lot of different sources where you can get that from. Initially, you can get it from the filings, but the management companies, I think the companies that are the best, really understand their model and can communicate it very clearly. That's a huge, I think, underappreciated aspect of some businesses. If you look at some companies in some industries, management will talk about things that aren't important in their management presentations, or they'll be really wandering. The guys that really understand the key KPIs, you should be able to look at it and just they're really good communicators. And when you think about the way they're running their business, if they can't communicate what's the good aspects of the business, how are they really running their business, right? I mean, if these guys have a very focused thing, another example of a company like that is called Asbury Automotive. They have a very focused vision. They lay everything out, and you can by just looking at their presentation, you understand what their model is. You look at some of the other competitors, and they don't talk about those types of things. That's an interesting test, I think. But then it does include talking with people, actually talking with management, talking with other people. And I guess most of the management stuff interactions I've had is I sort of develop a model and then ask them specific questions as opposed to, doing more of a broad-based interview. And a lot of it probably depends upon the size of the business and sort of the business model that's there.
Yeah, and I think to the flip side of that kind of management interaction is if they are too slick. If their presentation is too well put together, and look, you're gonna to become a CEO of a decent sized company, you have to be a pretty good salesperson, right? And so when we come in not knowing kind of the inside information of the company, we're doing the best we can. We're trying to pick up different clues along the way. and you have to be very skeptical when you're sitting down and talking to them and trusting kind of the information they're putting out in a public way. Because
so what are the red flags you look for?
Well, that's slickness for the first.
What do you mean slick
thing.
though? Like a slick suit or slick back hair?
Yeah, I mean the investor presentations and things like that. I mean, I typically don't meet with management. I might talk. If I do, I would really want to talk more about competitors than themselves. But when I used to meet with management, especially the smaller companies, you'd go in and see what their office was like. You'd just kind of see what kind of car they drove and things like that. I think Buffett and Munger had an anecdote today, right, about that bank. They brought in the CEO of the bank and he wanted to buy a new building immediately so he could have a little bit more prestige. So, these are little clues. Nobody's going to come right out and tell you.
Right. But they never met management, really, Buffett. And in the early days, I don't think they met many.
Right. So, but I think, the thing is you have to figure out the clues to that attitude and that personality type of who's in charge. And especially at the leadership level, that's going to trickle down to the entire company. Are they a bureaucratic type of person? Especially smaller companies, you just can't have that bureaucracy. And so I think those are the things you're trying to get out of different interactions or meetings or even talking to competitors.
Yeah, I mean, part of what you're trying to do is build like a story or narrative, and you basically are trying to get either confirming or non-confirming information, because all your valuations and all that kind of stuff is all based upon narrative. And so from my perspective, what you're trying to do is trying to find confirming and disconfirming information in the narrative, but you're starting out with, like, let's say a bigger concept and seeing whether the specific growth can happen over a period of time.